Let's check in with Bob Pisani
Okay.
and see what's happening as we open the markets on this Monday. Hey, Bob.
Yeah, mildly down, Dave. Remember the week after quadruple, which tends to be slightly to the downside, but we had a weird open, very tricky. Right after the close on Friday, futures dropped like 30 points in 15 minutes. So the futures were rallied in the morning. So the futures were up compared to the close on Friday after around 4:15. And yet we were still down. So tricky open here. Keep an eye on that. So the week, as I mentioned, after quadruple, which tends to be down, take a look at the sectors and you'll see here. Banks, remember, we're going into the stress test here. Maybe dividend cuts. We don't know about that yet, but they're under pressure today. Industrials, energy, we've got futures, oil futures expiring. Doesn't seem to be very much of a problem here compared to a couple of months ago. We were almost in backwardation on the futures contract, but not anymore. Tech's still outperforming. That's because Apple and Microsoft are up. So now we're approaching the end of the first half of the year. We're a week or so away here. It's a pretty simple story. Mega cap tech is up, and everything else is basically down for the first half of the year. So the Nasdaq 100 here, if you look, is up almost 15%. Put up that full screen there, and the S&P is down 4%. The rest of the world is down. Europe's down 11%. Japan's down 5%. Shanghai's down almost 3%. So you can see this is quite a wide dispersion here, and the outperformance of these mega cap tech names is really noticeable. Every day we put up the usual names, the big five. Your Amazon up, that's not a typo, 44% for the year, and Microsoft and Apple and Facebook. The only real laggard here is Alphabet, a comparative laggard, given the S&P is down 4%, but that's the laggard of the mega cap tech group. But these are the reason why the Nasdaq 100 keeps outperforming. The good news is the breadth's advancing overall for the market. The data is still supportive of a recovery, and a full lockdown seem kind of unlikely at this point. The bad news is the outbreaks are going to be with us for a while now, it looks like. And the key to keeping the market up is a bottom for earnings cuts. So just take a look where we are here. The market is expecting a V recovery. I don't know about the economy, but sure as heck in the earnings situation here. That's not a typo. Down 42% for second quarter estimates. And that number is not rising at all. We've still seen these cuts increasing. So the cuts have to stop, and the market now has to start removing these numbers. They have to start getting better overall, and the market has to believe that they're getting better, and we have to have companies come out and say, guys, here's our guidance for the year. We withdrew it earlier. Now we have some guidance. We need a little better clarity to keep the market going at this point. It's going to be a busy week overall. We got the IMF. They're going to update their economic forecasts for what all those are worth. We don't really know what's going on, but people still pay attention. The Fed bank stress tests are coming, and we'll hear about the dividends there. That's the big issue for the week. And we got the Russell rebalancing at the close. That's traditionally one of the big events of the year. Remember, because everybody's indexed now, these rebalancings become very important. We saw that on Friday after the close.